afternoon to you, everyone. Welcome to Masterclass here on Joy 99.7 FM. I am Pious Kojo Backah. Indeed, not your regular host. This time around, I'm sitting in for Yao Banafo, and big shoes for me to fill in. Yao, wherever you are, good afternoon to you, and I really appreciate this opportunity. This afternoon, we have a great topic we need to discuss and tell you about. Guess what? We are going to discuss investment and getting the right financial plan. Great discussion. I promise you, you'll love to listen in. The good thing about Masterclass is that it enables you to contribute and, of course, interact with us with your questions and, of course, your suggestions, etc. You can do so via our various online platforms here on Joy 99.7 FM. Pretty soon, I will let you know who my guests are. And as you can see here on Joy, you can follow us on Facebook as well here on Joy 99.7 FM. And you can get interactive with us on 055 111 997. Get interactive with us on WhatsApp on 055 111 997. All right, let's get started. And indeed, I've got to show you or let you know who my guests are to help us digest this topic we are about to discuss. Indeed, it is investment and making the right financial plan. My guest this afternoon is Eugenia Basheer, the Chief Executive Officer of Tesah Capital Limited, and Seyram Ofori-Attah, Investment Manager at Temple Investment Limited. Great ladies. Good to have you in our studios.
Thank you. Nice to be here.
Great. And I'm told, Eugenia, you'll be sharing some presentations with us here or as part of the discussion. So why don't you get started?
Okay.
Ready?
All right. Thank you very much, Pious. And as part of the plan over the next few weeks, we'll be discussing investments in Ghana, what happens on the capital market. A lot of us hear about investments, but some of us have tried, some haven't. So today we want to start by introducing to you the basics of investment. You may have invested before. It's still good for you to listen. Maybe there's some things you did right. There may be some things you did wrong. You may be able to pick a few things. Share what happened to your investments with us, and let's have an interactive discussion this afternoon.
All right. So even before your presentation is ready, why is it important for us to even talk about investment?
Okay. So it's important to invest in the first place. But it's more important for us to talk about it so that people can do it right. As I said, some people may have been investing, but they are not doing it right. So sometimes you interact with people, you try to talk to them about investment, and the first reaction is, no, I don't want to hear, and I put my money here and I lost it. It's important we all talk about it so that we can send the education out there as to how to do it right. Because when you do it right, believe me, the benefits are immeasurable.
And Seyram, I would come to you now. Per the literature, do you think over the period we haven't done well with investment from what you said, from what you've gathered so far? For which reason it's become so critical for us to have this conversation?
Yeah, I mean, investment levels in Ghana have been quite low. And you realize that I always say that, unfortunately, most of us were not taught about money in schools. Our educational system, we don't talk a lot about money. For those of us who did finance, you are taught the principles and not necessarily how it applies to you and for you to build wealth. So you realize that people genuinely do not know about the options out there, and so people are actually not invested. So it's very important that we talk about it so that people know that there are indeed opportunities to actually create wealth, and they can do it right, as Eugenia said, through investment. So it's investment levels are very low. If you look at the data that even the Ghana Stock Exchange shares from the on the stock market, you realize that a lot of the transactions are being done by institutional and even foreign investors. You look at the local participation, and it's very, very low. And so we are sitting down on money, and we are having others rather, come and make money off us. Yeah,
I see. So let's get started. Okay. So in the layman's, perspective, what is investment?
Okay, let me read a quotation to you. Luckily for us these days, we can go on the internet and Google. In my time, you have to go and look for textbooks to flip through. So I picked a definition from Investopedia, which says that an investment is an asset or item acquired with the goal of generating income or appreciation. So that asset you have or you have acquired has to generate income for you. Let me use a scenario. So you have an egg, or you have a hen that lays an egg for you. You can decide to consume that egg today, and then that is the end. Or you can decide to let your hen hatch your egg, and then what? You get more chickens, and then you are likely to get more eggs. So that is investment. So you are withholding consumption today so that you can make some income in the future. Right. So that asset you have, you are willing to put it into something that will earn more for you. If you bring it into the terms of investment, so you can say that financial investment is a plan to put money away to work, to put money to work today, to obtain a greater amount in the future. And because we are talking about financial investment, it's often through things like stocks, bonds, mutual funds, and what have you. So it is about putting money to work for you today with the aim of making more of that money in the future.
So is there any difference between investment and savings, really?
Yes, there is.
Tell me about it.
So with investment, as I said, you're putting your money away, you're making it work for you. But with savings, you're putting your money away and it's sitting there. Let me give you another example. Assuming, Pious, you and I, our grandfathers, they were looking ahead. They saw into the future. So we were born on the same day. And they all thought, we want our children to become fine people in future. So we want to make sure that they have an education. So we want to put some money away towards their education. So let's say you go to university at 18. So 18 years ago, you were born and your grandfather decided to put 1,000 cedis away for you. So he finds this nice box, he puts it in it, hides it somewhere in the house. He'll pass it on to your father when you are at university level so that you can go to school. He's saving for you.
All right.
My grandfather met somebody who introduced him to investment. So he took that 1,000 cedis and put it in a financial instrument. In 18 years' time, he's likely to have made almost 2 or 3 times what your grandfather would be able to give you. So that's simply the difference between savings and investment. With savings, you're accumulating the money, it's sitting there, it's not doing anything for you. For a lot of us these days, at best, is in a bank account. Have you looked at the interest you earn normally on your savings account? So that's all you're making, as compared to putting it in an investment.
Great explanation there. And I know you are ready for that great presentation you have for us this afternoon. So take us away.
Okay, all right. So we've already defined what investment is. So when I spoke about it, it's important that when you talk about investment, you talk about certain aspects of it. So when you invest, what do you get? You make a return. When we say you make a return, what does it mean? You make some income, you make some money from it. So unlike savings, where at worst you get an interest rate on savings, which is normally very little, with investment, you earn interest. What is interest? Let's assume I lend you money. I give you 10,000 cedis, and I tell you, when you are bringing it back in 1 month, pay me 10,100. That 100 is my interest. And that is what happens when you invest. So you invest in instruments, and those instruments pay interest. There are various investment instruments that will guarantee you an interest rate and therefore outcome. What again will you get from investments? You can get what we call capital gains or dividends. How do you get that? Another form of investment is investing in stocks. So when we say stocks, we call it stocks or shares. You go into the Ghana Stock Exchange, there are various listed companies. And when you buy into any of them, it means you are part owner of the business.
True.
As part owner, what happens? If the business is doing well and is making profit, you get some dividend. So that is dividend. Even if the business is not doing too well, they are not paying dividends, but the price of that business on the capital market is increasing. it means that whatever you invested is also increasing. So you make capital gains. So these are some of the things that come with investment. But I can't talk about investment without talking about a critical part, which we all sometimes like to forget. Investments come with risk.
Okay.
You cannot invest and think that it doesn't come with risk. So that's the difference between savings and investment. What is risk? I think as kids, sometimes your parents are leaving home and they'll tell you, don't leave the house, don't go anywhere, don't leave the house. Because for every day, when you take a decision to wake up from bed, whatever you do, you are facing risk. They are just different types of risks. So stay in the house. It doesn't mean that the house is 100% safe. We all get hurt at home. But your parents are probably looking at, if you go out, you could be knocked down by a car, you could be kidnapped, anything can happen to you. So they are weighing the risk relatively compared to staying at home, going out. It's the same with investments. No matter what type of investment you choose, it comes with risk. Why? Because you're giving your money to somebody to work with. Anything can happen. They may not be able to pay you back, or they may not be able to pay you back what they promised. Okay, so different investments come with different risks. And we always say, the higher the return you're promised, know that the risk is also high. So these are some of the things you need to look out for when you are investing. That investment always comes with risk. And I think recently we all learned a very good lesson about investment and risk, and the fact that all investments carry risk. I will not remind you, Pious. Okay, so we've spoken about savings and investments. We've looked at the fact that savings, it's a bulk you've put away. It doesn't earn anything, or at worst it's earning interest at bank saving rate compared to investment. Now, one of the things about saving is that there are certain things that work against your savings. One of them is inflation. So you put 1,000 cedis away. It's there, it's not earning anything, it is your 1,000 cedis. Remember, money is used to purchase goods and services. So today that 1,000 cedis can buy you, let's say, 1 bag of cement. In 2-3 years' time, because there's inflation, and inflation is the rate of increase, the rate of change in the prices of goods and services. So constantly the prices of goods and services are changing. So your money that could buy that 1 bag of cement today, in 5 years' time, cannot even buy half a bag. Because inflation is working against you. Prices of goods and services are changing. But if you invest, your investment is earning a return, and normally it's able to balance your inflation, and then sometimes, even depending on the investment you choose, it can even beat it.
All right.
Another thing that works against your savings is currency depreciation. In our part of the world, we cannot talk about inflation or savings and not talk about currency depreciation. We know that our currencies are pegged to certain major international currencies. So as the currency is depreciation, which is the norm that we have seen in our country, the value of your money is also losing value. That is why, if you look at what has happened in the past few months in Ghana, which we are all happily surprised about, which is that our CD has been appreciating, you find that it's directly affecting your purchasing power. We all saw the various adverts, CD now pay discount sale, all the things that we're seeing. It is because the currency is appreciating and it impacts your savings. In the same way, when it is depreciating, it impacts the value of your money. Your purchasing power is either increasing or decreasing. So that is what savings is, and that is why you should invest, because investment gives you a little income over your savings, and then that helps to cushion you against some of these things like inflation, like the currency depreciation I'm talking about. Okay, so if, for example, you put 1,000 cedis in a susu box, as I said, after 18 years, you still have your 1,000 cedis. You put it in a bank savings account that is paying you about 5% per annum. After 18 years, you have about 2,400. But if you put it in an investment, that is earning you about 15% per annum. Consistently, it's there. You're not touching it. It's there. You keep reinvesting. After 18 years, my grandfather will be able to give me 12,000 cedis compared to the stagnant 1,000 cedis from a saving.
Savings.
So these are some of the stark differences between savings and investment. Who can invest? Investments can be done by anybody as long as you're of legal age, which is 18, because you need a Ghana card to be able to undertake an investment in Ghana. Now, if you're not 18 and you still want to invest, you're a child, maybe you have some savings from your pocket money, you can get your parents to do it on your behalf. They can do it in trust for you. I'm bringing this up too because sometimes when we talk about investment, people feel that it is for a certain class of people.
Yeah.
Me, who am I?
Yeah.
I'm this lowly. I do my 1 hour labor work. How can I invest? Investment is not reserved for any particular group of people. Anybody can invest as long as you have a financial goal. We all have goals. You want to buy that car, you want to get that house, you even want to get married. You have to plan and save towards it, and so you can invest instead of just putting that money away till you find that girl you want to marry. You can decide to invest it. So by the time you find her, it's grown, you have a substantial amount, and then you can go ahead and get married. There are a few things to consider in making an investment. As much as it's important to invest, you need to be careful. There are certain factors you need to look out for. And that is why I'm sure by the time we finish, they will be hammering on the fact that you need to get advice. Absolutely. And when you speak to an advisor, they will help you to figure out some of these things. For example, in investment, one size does not fit everybody.
Okay.
In my early years as an investment analyst, so you get somebody walk into your office and they tell you they want to invest. Okay, how much? They tell you. Okay. And before you even start engaging them, they tell you what they want to invest in. I want to buy shares. Okay, what do you want to buy? PBC. Okay. Why do you want to buy PBC? Oh, I want PBC. Why? My friend bought PBC. So nothing you say, they want to buy PBC. Okay. So you start engaging them. Okay. So why are you investing? Oh, maybe we're in March. Why are you investing? Oh, my child is going to secondary school in September. So in September, I'll take it and go and pay their school fees. My friend says it will grow. So September, I'll take it. Your friend may have a different reason why they invested. You are going to pay your child's school fees in September. In September, when you come, I have to go and sell it for you. What shows I'll be able to sell it? Even if I'm able to sell it, the market may be different. So the 1,000 cedis you may have put in may have become 800. So it does not suit you. So when you speak to an analyst, there's something we call risk profiling. So an analyst or an advisor would assess you, ask you a lot of questions, try and understand how old are you, why are you investing, is it for your retirement, how far are you from retirement, do you have anything you can fall on if there's an emergency, or it is the same investment that you would come and invest in. Some of these questions sometimes seem intrusive, but it's because the analyst wants to be able to determine what suits you. No one box suits everybody when it comes to investment. Right. So these are the reasons why they will ask some of these questions. So you need to note that. There are a few others. You need to define your objective, how long you want to invest for, your age. For example, investments that may be suitable for somebody who has just started work and who is 25 years may not be suitable for somebody who is 55 years. 55 years, you are playing extra time. You have just 5 years to retire. So you have to be careful what sort of investments you choose. Exactly. But even if you take two 55-year-olds who have 5 years to retirement, there still may be differences. There may be that 55-year-old who has already built a nest egg, is already sorted when it comes to their retirement, and so they're ready to play the market. So you may even choose different investment for such an individual. So no one straight jacket fits everybody when it comes to investment. Right. And then, now what can you invest in? There are various things you can invest in our market currently. So we have investments that we will call, and I'm using the word carefully, relatively risk-free. Okay. Or relatively lower risk. Relatively lower because risk-free. We all decided at a point to forget about the fact that risk is relative, and there's nothing that does not carry risk, and we all run towards government investments, and we decided to assume they are risk-free, and we have all learned our lessons. So we are defining it properly now.
All right.
So they are relatively lower risk, or they guarantee you an investment. So you can have fixed deposits.
Right.
Okay. So fixed deposits are investments like treasury bills, government instruments, that are bills, bonds. And the thing about these is that they are normally, they'll tell you what return you get. If you give me 100 cedis, the return is 10%. So you know that at the end of a year, if it's for 1 year, I will get 10% of that. Then there are instruments like the same fixed deposits but issued by non-government institutions. Then you have stocks on the Ghana Stock Exchange. We call them stocks, equity, shares, depending on which part of the world you're standing. So these are, as I said, partial ownership in various companies that have listed on the Ghana Stock Exchange, which is like a market for these instruments. And then for those of us who have small amounts, who are always asking, oh, my amount is small, what can I invest in? You have what we call collective investment schemes. Those are like group funds that have been pooled together. So your 10 CDs, my 5 CDs, her 50 CDs is in a pool and is invested on our behalf by a qualified fund manager, is licensed, is registered, and you can access any of these investments. So in a nutshell, this is investment in Ghana. These are some of the things you can invest in.
Great insight, great insight. I truly appreciate it. I truly appreciate it, Eugenia. And we want to pause for a breather, take a quick break. When we return, we'll follow up with some questions for you based on what you've given us this very moment. We truly appreciate it. You're still listening to Masterclass here on Joy 99.7 FM with me, Pious Kojo Backah. Let's pause for a breather. We'll be right back with more.
Your favorite on-air business development program, Joy Business Masterclass, is in session, and you can interact with us on Facebook via the Joy 99.7 FM or Joy Business pages. If you tweet, the handle is at Joy 997 FM or at Joy Business GH. Don't forget to hashtag JB Masterclass. You can also call us on 0302 216541 or send your questions and contributions through to the WhatsApp number 0551 111997, and our facilitators will address your concerns. Attention everyone, class is in progress.
Welcome back to Masterclass here on Joy 99.7 FM with me, Pious Kojo Backah. Masterclass is proudly brought to you by Goil, Good Energy, Goil, Yara Yedia. Now, let me tell you about Goil. Good Energy brings you Goil Super XP, the ideal choice for most vehicles. It is flowing at many Goil stations here in Ghana. Just go, fuel up your vehicle and enjoy the smooth ride with all the benefits. Goil Super XP is quality and gives you the correct choice when buying regular fuel. Now, Goil Super XP is fortified with a special additive that gives longevity to your engine, makes your engine perform to the max, ensuring that you enjoy the minimal fuel, and it is suitable for most vehicles. As you journey the road, look out for Goil stations with the Goil Super XP. Sign and go fuel up your vehicle. Goil Super XP, Ufilia, Ubefili. Goil, Good Energy, Yara Yedia. All right, I tried. Now, let me follow up with some questions, Seyram. Now, when Eugenia was speaking, she spoke about, the higher the investment, the higher the risk. Now, I keep asking myself, knowing very well the risk is high when you're investing, why wouldn't we have a buffer to cushion you as prospective, an investor, so to speak, knowing very well that, yes, whatever I'm investing in, the risk could be high. Why don't we have some?
So maybe I'll approach it in two different ways. So first of all, one of the things I like to say is that before you start investing, one of the things you need to have is an emergency fund, right? And because investment really comes with risk. There's no denying it, whether it is high or whether it is low. As Eugenia said, we had investment instruments that had we had purported as risk-free, but forgot that it is relatively low risk, which was investments that were exposed to the government, right? So everything comes with risk. You walk out of your car or you walk out of your house, anything can happen at all. So there is no running away from that. But then, so to do this, you need to at least have an emergency fund. So an emergency fund really is money that you put aside. We say averagely between 3 to 6 months of your living expense, right, monthly expense that you put it aside, where that when there's an emergency you can fall back on. So that is one approach. And so when you go then and invest in an instrument, and you have during the 2 years you have call it a haircut, and you have to pay school fees, you can fall on this emergency fund to sort yourself out. So really you can't ignore the risk. You just have to find strategies around it. Another way to talk of cushion us is to diversify. We don't put all our eggs in one basket. And it's really important that we do that, because if one instrument is not giving you or it's down, let's assume the stock market is down, another investment, which could probably be a fixed instrument like a treasury bill or a bond, could reduce the impact of the risk. So have an emergency fund, and don't put all your eggs in one basket. And that is the way you go around the risk.
All right. So we have a listener asking this question. Are insurance policies considered an investment? Are they?
I always say this. Insurance is not an investment. Investment is not an insurance. Right. Insurance is for you to protect, or it's to de-risk you, right? So that in the event where you have a loss of income or a loss of life, it comes in to help you, recover, cushion you. However, investment is what you use to grow wealth. So there are two distinct things. And yes, sometimes in our bid to, because insurance adoption in Ghana is very low. So in our bid to make it quite attractive, now there are insurance firms are being innovative with structuring seemingly investment options attached to it. But insurance should be used for the purpose to de-risk, and whereas investment is used to grow wealth.
All right. So let's make progress really. With that, I want you to be practical as possible. So imagining I want to invest in something, where do I start from? Regardless of my portfolio, my status in life, where should I start from? Where do I begin?
Okay. So first of all, I would say ask yourself why.
Okay. Because
you need to understand why you are looking to invest, right? As Eugenia said, if I am looking to get married in 2 months' time, and that is my reason for investing, the approach that I will use will be different from somebody who is saving for her child's 18-year-old university fees. So you need to understand why. And then these are probing questions that even the investment advisor would also ask you to help establish. Then we get to find out your risk profile, as Eugenia said. So once you do that, then you need to go to the financial institution. So yes, there are a number of institutions, but largely all investment firms are licensed by the SEC, Securities and Exchange Commission. Okay. So depending on the type of investment that you want to do, if you want to buy stocks, you can go to an investment firm, or you can go to a stock brokerage firm, and these are also licensed by the Ghana Stock Exchange.
Meaning that I need not to rush to any financial institutions. I have to do my background checks.
Yes, you need. It's very, very important, because we find that there's actually been situations within our economy where we've had different investment products seemingly come up, and then they've all been scams, or people have lost millions of CD. So before you do ask a question, before you part away with money, who regulates you? Who reports to you? And you need to also understand the business model. How are they able to generate the money that they are promising you? That is, if you are doing a fixed product. If, for instance, treasury bills currently, 91-day treasury bill, if you want to invest for 3 months, it's around 10%, right? And so if somebody tells you that, okay, for this 3 months, I'm going to give you 40%, it's alarming. You need to ask yourself, first of all, who is regulating you? Is it the SEC? Is it the Bank of Ghana? Is it GS? Like, where do you feel? Who is your regulator? Who do you report to? Then how are you going to make up the money. So you need to really do a lot of the background. Fortunately, to now, a number of the investment firms and banks have platforms, and even we have the likes of Mobile Money, Momo, that you can also start investing, that have licensed products that we can also start investing with. So these are some of the practical ways that you can do.
All right. So you want to add something?
Yes, Pious,
Right.
I just want to stress on something Seyram said, and I think it's key as you're beginning your investment journey. Ensure that whoever you're dealing with a licensed institution. If it's in the investment field, the umbrella regulator is the Securities and Exchange Commission. They're a phone call away. They actually even have a toll-free line.
Okay.
You go to their website, there's a toll-free line. You can call them. I want to invest with institution A. Do you know them? Ask all the questions you want to ask. It is your money, so it is important to you. So please take these steps before you take that step to give your money to anybody to invest for you. So that's what I wanted to add.
All right. So I know the Securities and Exchange Commission very well, and I know the Ghana Stock Exchange itself, has embarked on numerous education by way of, sensitizing, the public about this, more especially at the basic level, secondary, senior, high schools, basically, engaging them on, stocks, market, etc. It is something that we need to pay a critical attention to more or less improve or enhance education when it comes to investment and getting the right financial plan. Seyram.
Okay. So I think we highlighted that, look, financial education cannot be, the essence of it cannot be overemphasized, right? And as a charity, charity begins at home. Yeah. So a lot of education is very important, especially at the basic level, because when we get it right from the beginning, when we understand how money works, a lot of us unfortunately wait till, because we were not privy to some of this education, some of these knowledge, wait till we are close to retirement or close to, have done all the bad financial decisions before we want to get it right. I personally have been working in the space for about 10 years. I was working within the investment space, managing people's money, but not managing my own money well, because it's more theoretical, right? So there had to be intentionality around, look, you can't only just be making people rich. How about yourself? How do you take charge? But I didn't do this because I didn't have the background, because I didn't have GSE at the time, coming to my secondary school or going to my primary school and then teaching us about money. So, the GSE's drive right now on financial literacy and the education, especially about market, is very well, it's in the right track, yes.
All right, that's fine. That's fine. Eugenia, let me come to you with this. So, in all my questions, I just want us to be practical as possible, because we don't know who is listening and wants to, understand this very well. So, granted, I know the reason why I want to invest. How much would you advise that I should start with?
Pious, as I've said right from the beginning, when it comes to investment, what you can do is different from what I can do. We are two different people. So I cannot prescribe and say it's a certain amount you start with.
Okay.
You need to sit down and draw a plan. How much can I put away every month towards whatever goal it is? You can take a step further, get help. If you speak to a financial advisor and you tell the advisor that I want to be able to, I keep using a car. Okay, I want to be able to buy a car in 5 years' time. This is the sort of car I'm estimating. This is the price. The person will even be able to calculate for you relatively how much you have to put away every month to be able to get that amount you want at the end of the period. So it's up to you. There's nothing like you start with X amount or Y amount. Having said that, of course, there are certain investment instruments that will tell you what the minimum is. But I know there are collective investment schemes that we spoke about on the market who will tell you there's no minimum. So even if you have 10 CDs, they'll take it. The key thing is commit to it. If it's 10 CDs you can do every day, every week, every month, be committed. Do it consistently. I keep telling people that some of the biggest individual portfolios I have under my management, it is not because the person brings you a lump sum to manage. They have a plan and they stick to it religiously. They do things like standing orders. So immediately their salary hits their account, that amount is gone. It's gone into investment. Because if it is in your account and that family member comes to borrow money from you, once it is there, you can't look at their face and let them go. But if you intentionally commit to, I want to invest a certain amount every month, and you have done a standing order or direct debit, and it is leaving your account on a certain date every month, you know that it's not part of your budget.
Right.
You don't have it to spend.
Meaning that you need to have the right financial plan, isn't it?
Yes.
Yeah. So tell me about that, and how that, juxtaposed to, making the right investment.
Okay. So, I mean, a financial plan really is, we all left. When I left my house this morning, I knew I was coming here, right? So there's always a destination that we all have to work towards. And so, as we have said, you don't just up and say, I want to invest. I want to invest for what purpose? Because the purpose will also keep you on track, and it is what will keep you motivated. And it is what will help you, for us to even identify what type of investments will be best suited for you. So the financial plan really is just lays out what you want to do, where you want to get to, how much you should be spending, how much you should be investing, or how much you be saving to work towards that plan or that goal. And so the plan is also what will now help us define the instrument or the type of investments that you should actually do. So if your plan, for instance, is to give your children who are maybe 2 years old now, and you are now going to have kids, and then your plan is that by the time they are 18, I want to give them 100,000. That is the plan. So then we can then work it backwards and say, okay, if you want to give them 100,000, then you need to put aside maybe 50 cedis in this type of investment that will give you this amount, this estimated interest rate to help meet the plan. And so once you also have the plan, if you do the naming ceremony or the christening and somebody comes to give you money, guess what? You will not just spend the money, you will put it towards the plan, because you are being intentional about it. So it's very important that we have the plan. Write the vision plain, right? So we need to write it down, have the plan, and then we are intentional and strategic about it. If you receive birthday gifts, on the rich aunties give your children birthday gifts, you don't just spend it. Or yes, you are buying the toys, but keep a bit of it, and then you go towards the plan, because remember, your plan is that you're going to give them 100,000 by the time they are 18, or you are saving towards this by the time they are 18.
All right, Eugenia, would you advise me to, as we wrap up the conversation, would you advise me to have multiple, investments? Would you?
Definitely. I think we've spoken about the importance of diversification, not putting all your eggs in one basket. No matter how relatively low risk the investment is, you need to diversify. So you diversify across various investments. Why do you do that? As Seyram explained, you may have, the investments are done in the market, and the market goes through phases. So depending on what is happening in the market, one investment may be doing well, the other may not be doing too well. Then you have a cushion, so that always you have a balance. So you definitely need to have more than one investment vehicle. You need to invest, you need to diversify. So seek help, seek advice. If you choose a collective investment scheme, it helps you to automatically take advantage of diversification, because that pot is diversified into various instruments. Okay. So yes, you definitely need to have different investments.
All right. We are trying to wrap up the conversation, but as we do that, maybe a little bit of education on this as well, which of course has to do with making the right investment. Now we saw what happened previous years ago, which of course I told you not to remind me. Now at the end of the day, the investor was badly hit as a result of whatever it is. Who gets to penalize my trusted institution? I went to invest in your trusted institution. Now, whatever decision that has been taken, I get to bear the brunt of it, which of course wasn't my fault. Don't you think I need to be compensated?
Okay.
Maybe you want to take it?
Sorry.
So you went to a trusted or a licensed investment institution. They took the decision on your behalf. They invested for you, and this is what happened. we'll have to look at certain things. For example, in saying the institution should be penalized, what did the institution do wrong? Did they follow the laid down procedure for investing for you? Did they engage you? Did they understand that this is what your money is for, and therefore these are the instruments that are suitable for you? Now, when they did they do their research on what they are investing in? And then when they invested, what happened to the investment? Is it that they picked investments that are by institutions that are not licensed or institutions that are not regulated? No. They actually did all the homework and picked institutions. If we are referring to the example you are talking about, then they picked institutions or investments that we all classify as relatively low risk.
Okay.
So in that case, what can you say the institution did wrong? We all did not foresee what happened in the market. We knew what was happening in terms of the country's debt exposure, but I think none of us in our wildest analysis predicted that or foresaw the magnitude of what happened. So some of these things happened.
Right.
And I know most of us are going through what Seyram calls post-traumatic stress disorder when it comes to investment.
Yeah.
But in my local Ghana balance,
Yeah, okay.
the fact that your mother drowned, which is serious, is sad, doesn't mean you stop drinking water.
Right.
So get up, get on that horse again, and let's start investing.
So, last word from you.
Okay.
A minute.
Okay. Yeah. So, I mean, as Eugenia has said, another thing is that we should also be interested to understand what we are investing in. Okay. It's very important because a lot of the funds, for instance, that we may have suffered haircut, the information was actually out there. Okay, this is what we are investing in, and so we should just also be interested, understand what we are investing in, and also don't ignore the risk factor. As we have said, investment comes with risk. We just have to find a way to balance the risk, and we should just start.
Great. Thank you so much, ladies, for joining me here on Joy 99.7 FM. It's been Masterclass, proudly sponsored by Goyle. They say Goyle, good energy. Goyle, Yera Yedia. Thank you so much for doing the listening as well. And of course, my guest has been Eugenia Basheer, the Chief Executive Officer of Tesah Capital Limited, and Seyram Ofori-Attah, Investment Manager at Temple Investments Limited. Grateful for joining me here on the program. I truly appreciate it. And reminder that this is our month series by way of, time with the capital market here on Masterclass. You just want to miss out. Great discussion coming up next week. Do make a date with us. Grateful serving you. Always a delight coming your way. I am Pious Kojo Backah. Lexis Bill shortly.